Now after recording all the transactions, I will find that I brought money in form of capital, then I moved some money into bank, I bought a computer. Then what happens at the end of the month, I say I bought 4 lakh, my 4 lakh has to be reconciled. So what is the balance I should have in my cash? It is 1 lakh. So what I do, in the beginning of next month, I bring down that 1 lakh as my so-called opening balance. So when you brought in capital, this was your opening balance, you did transactions, you said I should reconcile my 4 lakhs. So this is the amount which is balance left out. You wrote 1 lakh so that this gets balanced, and take this balance down and say this is my opening balance. So what is this opening balance? It is a debit balance, because it is on the debit side we are carrying it forward or bringing it down to the next month. It is a debit balance. There is a cash balance available. Cash is an asset. So when I have a balance available in cash, it will be on the debit side or a debit balance. Similarly, if I want to know what is the balance in my bank account, as we said, the bank account, there was a cash transfer of 2,50,000, so it increased. Thereafter, I paid for machinery, I paid rent. Thereafter, I know at the end of the month, my total of bank balance should tally, so I should have a balance of 1,45,000 rupees. So next month beginning, I bring down as it is my opening balance, which then becomes a debit balance in the bank account. This is how the ledgers give you an idea in each ledger account what is the debit or the credit balance available depending on the nature of the account. Generally, asset accounts will have a debit balance because increases in assets are debited. A liability account will have a credit balance because usually, this is the usual thing I am saying, because increase in liabilities are credited, and so on and so forth. Income accounts will have usually a credit balance because increase in income is credited always, and increase in expenses will always have, because it is debited, expense accounts will have a debit balance. This is a basic logic that one should remember. So this is how the ledger accounts now capture, and looking at a ledger account I can know what would be the balance, so how much I have spent, etc. kind of questions that we asked in the beginning can be answered. But believe me, this is not the end of it. We need to go further on this, but before that I would like you to look at a clip that sort of gives you a little more insight, a little more flavor of what we just discussed.
Welcome to recording in the journal and posting to the ledger. Let's get started. Let's first review our acronym from the last module, DEALER, D-E-A-L-E-R. The accounts that increase with debits are dividends, expenses, and assets. Accounts that increase with credits are liabilities, equity, and revenue. In order to move forward, we have to commit this to memory. When we want to increase an asset, an expense, or dividend account, we should debit that account. If we would like to increase a liability, equity, or revenue account, we must credit that account. Let's take a look at some examples. On our screen, we have a subset of a journal. We have the account name, the amount debited, and the amount credited. We'll use that to record our transactions. First, we borrow $10,000 from the bank. Analyzing this transaction, we know that cash is received, cash is an asset, so we have an asset cash increasing. The way we record that in the journal is by debiting cash $10,000. Since cash is an asset and assets increase with debits, we're debiting cash. We have an obligation to repay. Therefore, we have a liability increasing. When we have a liability increasing, we're going to credit the liability, in this case notes payable for $10,000, the amount that we're obligated to repay. The transaction is we borrow $10,000 from the bank. It's recorded by increasing cash, by debiting cash $10,000 and crediting notes payable $10,000. Our next economic event is to sell $20,000 in common stock. Here we're receiving cash, an asset. An asset cash is increasing, so we'll debit cash $20,000. Assets increase with debits. We're also increasing the claim on the owner's business. The owner's claim is equity, so we increase the equity account common stock. Equities increase with credits, so common stock is credited by $20,000. Our next transaction is to pay $5,000 in cash for equipment. Equipment is received. Equipment is an asset, so we have an asset going up. We debit the asset account equipment for $5,000. We also have cash being paid. Cash is an asset. Since cash is going out, our asset cash is going down, so to decrease our asset cash, we credit cash $5,000. The economic event is to pay $5,000 cash for equipment. The journal entry to record that is to debit equipment $5,000 and credit cash $5,000. Our next transaction is on December 31st, Great Pizza Company received $3,000 for pizza delivered to customers. Here, we're delivering pizza, so we have a revenue account increasing. To increase revenue, we would credit the sales revenue account. Anytime that we credit sales revenue account or any revenue account, net income increases and equity increases. We're receiving cash. Cash is an asset, so we have an asset cash increasing. To increase an asset account, we will debit that asset account for $3,000. The economic event is we received $3,000 for pizza delivered to customers. Cash coming in increases our cash balance, so we debit cash $3,000. We provided delivery pizza to our customer, so since we provided pizza to our customer, we earn that revenue, so we increase revenue by crediting revenue $3,000. Our next transaction is paying $2,500 for expenses. We're told that we have expenses. That means expense goes up. We used a good or service in the production of the pizzas. In order to increase an expense, expenses increase with debits, so we debit our expense account $2,500. An increase in expense account decreases net income and decreases equity. We're paying cash, so our asset cash is decreasing. To decrease an asset account, we would credit that asset account for $2,500. Next, let's look at the ledger. We have our first journal entry recorded, a debit to cash and a credit to notes payable. To post this to the ledger, we would increase our cash account by debiting cash $10,000 and increase our notes payable account by $10,000 by crediting notes payable. Remember that the journal and the ledger are both necessary in an accounting system. The journal represents a chronological listing of all the transactions, whereas the ledger summarizes the transactions affecting a particular account. Next, we receive cash of $20,000 in exchange for common stock of $20,000. We already have our cash and notes payable ledger accounts established. We need to add our common stock. We're going to increase our cash account $20,000 and increase our common stock account $20,000. Our next transaction is to record equipment for $5,000. We're paying cash for that equipment. We already have our cash, our notes payable, and our common stock account, so we need to add our equipment account. We have a debit to equipment, so the equipment ledger account will be debited for $5,000 and the cash ledger account will be credited for $5,000. If we want to calculate balances, we draw a line and record the balance for each account. In the case of cash, we have a $10,000 and a $20,000 debit and a $5,000 credit. 10 plus 20 minus 5 gets us to a $25,000 balance. The ledger, after all entries are posted, are as follows. The cash account has a balance of $25,500, notes payable $10,000, revenues $3,000, equipment $5,000, common stock credit balance of $20,000, and expenses debit balance of $2,500. Keep in mind that we didn't illustrate all of these transactions in the module when we were looking at journalizing and posting, but after all the transactions are posted to the ledger, we have this information. So now let's review. Accounts that increase with debits are dividends, expenses, and assets. Accounts that increase with credits are liabilities, equity, and revenue. I know we've said that a lot, but I can't emphasize the importance enough. You must commit this to memory to be successful.